There's been a major shakeup at Jamaica's biggest bank, that's National Commercial Bank, NCB. Its top 2 executives have been sent on immediate leave, and that's kind of weird because of the way how it's worded, but we're going to discuss. And Chairman Michael Lee Chin is cutting his own leave short to take over the reins as he complains about a lack of dividends. Business writer at the Jamaica Observer, David Rose, joins us to give us the latest updates on possible implications. We also have with us Keisha Bailey from Profit Jumpstarter, observer and commentator in her own right as well, market watcher. We'll have
Investor, the whole thing, yeah.
All of the above.
But NCB shareholder, let me point that out.
NCB shareholder.
Everybody is at this point. Once you have the JSD, almost an NCB shareholder. 40,000 strong.
We got to talk about it. And of course, I had to call you, David, and say, cause I always tease her how David always know, but you
always.
I have to know almost many things or everything just because
it's your job. It's your job. Yeah. You have been tracking the story and writing about this story between you and Dashan there at the Observer. You've been doing a good job covering the developments, and what a bunch of developments there have been. So, David, this conversation is going to mostly be between me and you, and I'll ask you to chime in now and again, giving her, reaction and what she thinks is going to happen next. So, David, let's start with the latest news. Is this even the latest news? Because there have been developments by the hour today.
BOJ put a statement out.
BOJ statement was the latest news. So maybe we need to start a little bit before that, which would be the statement sent out this morning confirming that Patrick Hilton and Dennis Cohen, the NCB CEO and Deputy CEO, have agreed to 3 weeks vacation leave. And I'll let you fill in the rest of the blanks. What's going on? Bring us up to speed.
Well, right now we just know so far that, the 2 top dogs or top generals, to be more appropriate, have been asked to go on vacation leave for 3 weeks, and that, management is supposed to come in that same 3-week time frame. And to be honest, based on what I saw in that statement, it's quite concerning that it was said that they were supposed to have a meeting Monday, with the acting chairman, which should have been Professor Alvin Wint, surrounding their compensation. And, there was an emergency board meeting on Sunday, and then they were told vacation leave, then negotiating severance package.
Is that the joint statement? Are you referring to the joint statement?
The joint statement, yes.
Because I haven't even seen that joint statement yet.
Maybe Nationwide posted it.
Oh, all right. So go ahead and talk while I find it, and I'll read it for the people.
Sure. So based on what they've highlighted, it was relatively sudden. No one expects this. We saw the article on Friday in the Jamaica Observer about Leach not being happy about not getting any dividends, talking about the efficiency ratio, asset tax, and these other things. And it's been pretty hard for him because he is not an executive of NCB. So the only way he gets paid, like every other shareholder, is through dividends. But since May 2021, they have not paid any dividends to shareholders. So 8 straight quarters, no dividends. And, that's kind of hitting MLC because he, has to deal with his own personal liabilities, in this case, debts that are coming due in short order. And some of these debts that he would have taken out would have been secured by NCB Financial Group shares. And the dividend income was supposed to also service part of those loans, but there's no dividend to service those loans. So you see how messy this situation is, Kalilah?
Yes. All right. So I've found the statement. Can you guys read it?
We can read it, yes.
Let me read it in full. I meant if it's big enough for the viewers to read. All right, so let me read it in full for you. It says, ladies and gentlemen, this is a joint statement from Patrick Hilton, CEO of NCB, and Dennis Cohen, Deputy CEO. The statement was sent out today. This is the first I'm seeing the full statement. So far, I've only seen excerpts from it up to now. So it reads, ladies and gentlemen, we have noted certain comments in the media and wish to make some clarifying comments. In addition, we've been receiving numerous calls and queries from members of the media. Our first inclination was to ignore these comments, but we are being deluged with messages and phone calls from family members, concerned persons internal to NCB, in our loyal society, and from persons overseas. As you will appreciate, we are professionals who have carefully built our careers and our reputation over decades of service in the sector in general and at NCB in particular. We have established a stellar record of performance over those years, which speaks for itself. We cannot sit quietly by and allow our integrity to be impugned by speculation and a misinterpretation of the facts and circumstances. Firstly, we have done nothing wrong where our compensation is concerned. All we have done is accepted payments as approved by the board, consequent on our surrender and return to the company of some $13.8 billion of shares, which we then owned free and clear in July 2021. The appropriate stock exchange releases were made at the time, and it was indicated that the company would be compensating us over time for this act of surrender and return of the shares. Earlier this year, we were asked to consider amendments to our compensation, which would reduce the quantum, and we made certain proposals in that regard. We were asked to take a look again, which we did, and we recently presented another set of proposals to result in a deferral of a significant portion of our compensation. The board requested that we look at further adjustments which would hit a particular target. We did so, and I verbally shared these proposals with Professor Alvin Wint when he was acting as chairman. We were scheduled to discuss them with him on Monday morning. A special board meeting was held on Sunday, and we were subsequently informed by Chairman Leachin that the board had taken a decision to ask us to go on leave while certain discussions regarding a negotiated separation take place. We agreed to proceed in this manner. Like so many other persons, we have families, including siblings, children, friends, and professional colleagues. The feedback some of our families and friends have been getting from some of these news reports has caused them undue concern and distress. We do not believe this is fair to us or to them in all the circumstances. And that's the end of that release. Okay. Mm-hmm. Interesting. What do you make of that, David?
They're trying to really clear the air because a lot of persons do not understand that what is on the stock exchange is NCB Financial Group. But because the name NCB is in there, persons only look towards the bank and perceive that these gentlemen were as literally executives of the bank and were separated. And that's not the actual case. So keep it simple. NCB Financial Group is a holding company. That holding company has 4 subsidiaries, but 3 main operating ones. You have Clarion Group, they own 50.1% of that. That's run by Ian Truran. You have NCB Jamaica, which is the bank we all love and know. They own all of it. That's run by Septimus Blake. And you have Guardian Holdings Limited, which is based in Trinidad, and that's run by Ian Shinapu. They own 61.77% of Guardian Holdings. So they are executives of the holding company, not necessarily executives on the subsidiary level. Patrick Hilton chaired the boards of GHL and NCBJ, and they're also on the boards of Clarion and other key subsidiaries. So when a person's asking, where were they sacked from, where were they removed from, it's from the operating company level. They weren't necessarily executives of the bank. They were moved up to the group level back in 2019 after the Guardian transaction in terms of the majority ownership control. And I can understand the queries because for the chairman to go on 3 months leave in May and to abruptly come back, and for the 2 highest leaders in the organization to be sent on leave, and then a statement that says thank you for all your service and everything, it can be perceived that something went wrong internally.
Definitely. Because even up to a month ago, when we had Mr. Leachin on the show, and I asked him specifically about the whole dividend issue and about confidence in NCB, and his response was that the company is still solid, and nothing compared to what the action that he took over this past weekend. So what changed in that period of time? And indeed, the statement that NCB said, even though they're saying it's vacation leave, let me share it with you guys. So you can see. No, I have it here. So this is the statement from NCB. Let me try zoom in so you can see it a little bit better.
Just press the arrow to the right, Kalilah, to get rid of the...
Yeah, man, I got it. Oh, it won't full screen.
Yeah, that arrow.
Oh,
yeah,
there we go.
There you go.
All right. So it says NCB Financial Group announces that effective July 18, the Honorable Patrick Hilton and Mr. Dennis Cohen have, by agreement, proceeded onto vacation leave for 3 weeks. During this period, it's expected that other arrangements will be made for the carrying out of their roles on an interim and then permanent basis. So that doesn't sound like it's supposed to be is really vacation leave, because they're already making plans for what's going to happen on an interim and then permanent basis. For the immediate future, Michael Lee Chin, chairman of NCBFG, will carry some executive responsibilities. And it goes on to thank them for their services, which sounds like a breakup, because this is normally the type of statement you put out when somebody is leaving the company, not just going on vacation. NCBFG appreciates the service of Mr. Hilton and Mr. Cohen to the NCB Financial Group over the past 19 and 20 years, respectively. During the period of their leadership, the group has grown to attain and maintain record levels of financial performance. The group will continue to benefit from its strong overall leadership team while the financial holding company undergoes the above changes. That leadership team includes Mr. Septimus Bob Blake, CEO of NCB Jamaica Limited, who also oversees NCBJ's subsidiaries, Mr. Ian Chinapu, Group CEO of Guardian, and Ian Truran, CEO of Clarion Bank. And that's the end of that statement.
So I can bring in a different perspective here. So typically what happens with this level of senior executives, once they begin that separation process, it always almost starts with that vacation period, because it's during this time that, you know, a lot of the legalities and everything are tied up during that period. So you won't find them returning in office, but discussions are still ongoing around severance, because it started with that 3 week, then ultimately permanent move out. It doesn't necessarily imply that anything bad is happening within the company, but this is just the general practice that occurred because they're at a very senior level of the group of companies. And so they won't necessarily be able to just up and leave at the very minute. Things have to be discussed between now and then. But fundamentally, putting all that move aside, NCB itself, from a financial perspective, nothing has happened to that. NCB Financial Group, which is a listed entity, still very solid from a financial perspective. So when I look at it as an investor, my personal thoughts are, well, there is a restructuring happening, but is there something affecting the financials, right? No, not as of now. More will come, because it usually just starts like this. But as of now, nothing that's affecting the financial health of the company.
The subsidiaries, I mean, Kalilah.
Yeah, the subsidiaries. That's my take on it.
All right.
A lot of people, on the flip side of it could be, seen as, you know, the immediate vacation is there's some investigation that needs to be happening. So we're removing them from the desk so we can launch that investigation, because that can happen as well. But I don't see that being the case right now. I think it's just a move away so that the negotiations can happen.
So as you speak about negotiations, this is a hell of a negotiation. If you recall the statement that I read from Hilton and Cohen, referring to the $13.8 billion in shares that they were required to give up and now need to be recompensated. That's a whole heap of money. That's 90 million, almost 90 million US dollars that they would have to be compensated just for their shares that they gave up. That's in addition to any severance and any other things that need to be negotiated. So how would that impact the company, David?
So, based on what you can observe from the NCB Financial Group financials, what you realize is that there are 6 listed executives for NCB Financial Group. Keyword, the financial group. And the subsidiaries, 6 key executives. You have Hilton, Alison Winter, Cohen, Dave Garcia. I can't remember the other 2 individuals right now. Those are the key individuals, right? When you go to the related party transactions for the individuals, in this case, with respect to related party transactions, is for the company, meaning NCBFG, the standalone business, $3.94 billion related to salaries and other short-term benefits. And when you go to directors' emoluments, for salaries and other benefits, you're seeing $2.33 billion. And only directors who are executives and would actually get salaries would be Mr. Hilton and Mr. Cohen. And for share benefits, you're seeing $1.32 billion reflected. So
that's for 1 year?
Yes, this was for 2022 financial year.
1 year salary, they jointly earned how much billion?
So between the two of them, salaries and other benefits, it's 2.33 billion Jamaican dollars. And for share benefits, it's 1.32 billion.
So 3-point-something billion together.
3.65 billion of total compensation, but for salary, it's just 2.33 billion alone between the two of them.
Just 2.33 billion.
So,
so somebody's asking you to explain the issue with the shares. Let me see if I can find back the comment. Somebody wanted to explain. Here it is. Good night, David. Can you explain the compensation issue regarding the shares valuing the 13.8 billion? So what happened there? Why they had to give up that 13.8 billion in shares? Do you know?
So back in July 2021, I recall when there was a share surrender between Mr. Cohen and Mr. Hilton, and it wasn't on June 3rd. Let me just bring it back up right now, but I believe it was related to the compensation. They own these shares in their own outright, but they surrendered them to a particular share scheme. And let me bring up my article. So yeah, it was done at a transaction price of $145. This was done, and it was based on the change in the compensation arrangements of Mr. Cohen and Hilton. So at the time, Hilton surrendered 61 million shares, Cohen surrendered 33 million shares, and he said that you should be held on a custodian for future distribution to executives, which also included Hilton and Cohen. So they didn't explicitly kind of dig in and explain what really happened. They just said there's a compensation change, but didn't explain why they had to surrender the shares, because it was just in their own individual names. So I'm not sure what was the major crux of that segregation of those shares, but they've highlighted it in their public statement that this was part of their compensation, which would have been paid out over time, because Mr. Hilton turns 60 next month actually.
So it seems that part of the issue that Leachin has been citing is the compensation package of these two gentlemen, saying that basically they're earning all this money while shareholders are getting nothing. And I noticed that they also addressed that in their statement, saying that they did nothing wrong. They only accepted what the board decided to give them. Is that the sense that you're getting, that was part of the issue, their compensation?
It's an issue, and to be honest, it looks like there's a lot of bad mind, Hilton and Cohen, based on what I've seen privately and, the vitriol that I've seen persons express. You can say there's a lot of bad mind, between our different set of individuals, big money, small money. There's a lot of displeasure, and when persons hear what they get paid, it, ticks off some persons, but the reality is, they compensated, the board signs off on it. And the thing is that the actual talent management and compensation committee of NCB is chaired by MLC himself. So he's one who has to sign off on their compensation as well. So it's kind of weird when they're saying that, they highlighted that they're trying to, talk about pushing their compensation further down the road. And the reality is they're overseeing a 2.1 trillion J consolidated balance sheet. So the compensation technically should reflect, that level of oversight, because NCB, FG is not just in Jamaica or in just banking, it's in multiple sectors, multiple segments. And these are high senior executives who were there with the bank, which then morphed into a financial group. So if in this case, he signed off on it, it's kind of hard to hear him saying that he has an issue with it now. And he's the chair of the committee.
Yeah. Let's not forget as well that these gentlemen have presided over a period in which NCB has performed remarkably well. So it's not that they were bad at their jobs, quite the contrary, right. They're exceptionally good at their jobs. And take that into consideration when you're thinking about how much they are compensated as well.
Well, think about Kalilah. Remember
Go ahead,
that NCB
Peter.
was
So I wanted to just touch on the payment structure, right? And kind of delve it. It is common practice, but so always we're at the group level. So these aren't the executives of NCB, the bank that we see. It's at the financial group. So the contribution of shares over, it occurred around the same time that there was that halt in the dividend payments. So usually what happened, it's referred to as a clawback, where these executives provide shares that will later be repaid to them. And what they're saying is that, we're offering these shares over to the company in the event of a crisis or any unforeseen things that would come to the company. We stand ready to use these shares to help to bolster the company, which is a sign of good faith from senior leaders. What would happen later on is that the company, when things get better, they would repay the executives, whether through shares or through cash. So that's something that's common. It happens all over the world. And so it's not anything too out there. It's something that's pretty common. And it occurred around the same time where we had that a halt in dividends and the BOJ was speaking about higher reserve requirements for banks and all that. So it was a move of good faith from the senior executives.
Not anticipating that a couple years later,
All of this would have happened. Correct.
But the thing is, he's one who signs off on Kalilah. That's the thing about it. It's not like MLC is on, Mars or, is in Fiji. He is there presiding the board meetings and the one who also signs off on these, on a compensation for, both these gentlemen alongside at the subsidiary levels as well. So, it's just odd. And the reality is NCBJ is coming from $175 billion worth of assets in 2004. When Patrick and Dennis kind of stepped in, 2.14 trillion now in 2023. So you really cannot negate the contribution that, their leadership would have done over the years, because we're talking about NCB, which was, a group structure, this, that, FinTech happened, and it was just chaos. And nobody wanted NCB. MLC stepped in and everything. Patrick would have been, the MD at FinSac, overseeing this whole process, and he came over, as the deputy managing director, and then took over as managing director. So, these gentlemen have done what they needed to do. The value has increased over the years, and the reality is, NCB has different times and different seasons, because when you had the 2008 crisis, dividends were drastically cut. But we had never seen an event like COVID that, would have resulted in such an unprecedented move to cut dividends altogether. We have to put things into context. And one thing that, I didn't get to mention earlier was that this whole shift in terms of MLC, based on what the Nationwide reported about MLC coming on as executive chair, is reminiscent of SVL. And let me tell you why I say that. So remember in 2020, March 20, Anne Dawn Youngson was the president and CEO of SVL. She resigned on March 20. By March 23, 3 days later, Gary Perry becomes the executive chairman. So it's not something that is not unknown to our market. It's just the scale and size of the business that, we have seen this event, whereby the executives who lead the holding company are, removed, and an executive chairman steps in as the major executive of the group, and you have the subsidiary heads carrying out their specific roles for each subsidiary.
Yeah. What do you make of Leachin's admission to your colleague, Dashan Hendricks, there at the Observer, that he too was suffering for lack of dividend payments, and that's why he had to be selling all his assets? That really surprised me, because when we asked him on Taking Stock a month ago, he said he was just rebalancing his portfolio. And then now
but that's the same thing, though. It is the same.
He admits that but specifically he said he's rebalancing the portfolio to invest in these pet projects, the cancer research and the
I think that
nuclear energy.
Green energy, yeah.
And then now he says, well, he has to sell his assets to pay his bills because he's not getting any dividends from NCB, and he reportedly earns about $30 million from NCB in dividends a year. So big money talk.
So
but the thing is, investors Well, I can probably just add a little context before dividend. Investors earn two ways, dividends or capital appreciation, right? With the absence of dividends, if there are personal obligations that the MLC has, it would be no, I need to sell some shares to do so. Maybe it wouldn't have been his preferred means of getting cash flow, but still, nonetheless, he's able to still execute something. So, in what he had said about doing a rebalance, still, technically and diplomatically correct there in terms of the response and the choice of words, but still, it leaves room for him to be unhappy that he would have to resort to selling shares. His preferred way would have been, have dividends that have been accumulating, because from my calculations, on average, each year he would be getting north of 30 million in dividends from NCB had they been paid.
US dollars.
Right. And to be going years without that, it can create that shortfall.
And remember, Kalilah, Lee Chin, would have borrowed against NCB shares for, some of his other businesses. So we should remember, NCB is the crown jewel that we all know is what brand Lee Chin is. But, he has Mary's Bank Coffee Factory, he has the Portland businesses, and he has different businesses that, he potentially acquired or, wants to expand. And he's always saying it, use other people's money. So, he'd have taken out debt, to potentially purchase some things. And, most time what you tend to see in the financial space is whereby once the maturity for the debt comes, you roll it over, meaning that you tend to refinance at the market rate, or try to extend the tenure of that debt, and you just keep doing that. And because MLC had the dividends from NCBFG coming in to support those payments, it worked. But now, with basically 2 years plus no dividends and maturities of some of these debts coming up, he's under pressure. And that's something that we all need to remember. While some persons might have accumulated a significant amount of wealth, they themselves, want to increase their other ventures. But to do that, they can look at the cash that they're getting from one business, or use cash from debt to fuel other business ventures. And, nothing's wrong with it. But we're seeing now whereby, that strategy is no longer feasible based on, the fact that NCB is a regulated institution, financial institution at that, the largest set of companies in the Jamaican market. So there are restrictions that, will come up when you have these kind of black swan events.
But David, we've spoken about NCB and the whole dividend issue before on the show, and you are the one who explained to us about the new Basel III requirements, the new accounting standards, and how NCB now has to have a higher capital base. So that was, well, at least that's what you explained to us as the justification for not paying dividends. So is MLC being selfish now in insisting on this dividend payment when, as you explained, these new requirements are in place? Is it a bad thing for NCB to pay dividends now?
The reality is it's kind of complex, because here's the problem. You have these critical capital changes coming from Basel III, and for those who don't know what I'm talking about, just a quick explainer. Yeah, we're currently, in Jamaica, we're currently operating under Basel II. Yeah, something called capital adequacy. Regulatory minimum is 10%. The way it is currently set up is that Tier 1 capital and Tier 2 capital are 4% each, right? Under Basel III, Tier 1 capital will be 6%, Tier 2, 2%. And under Basel III, you would also be required to add an additional buffer of capital as well onto, your financial entity, in this case, a bank. So as a result, what you've seen is, in recent times, NCB transferring some of its retained earnings to retained earnings reserve, and that increases Tier 1 capital ahead of some of the changes coming with Basel III. And in December, they would have transferred about $8 billion to that reserve. So I'm actually going to just confirm for you. Give me a second. So yes, $8.1 billion transferred back in December quarter. And even Scotia Group, they had to also, they also transferred some money on the banking level, in the case Bank of North Jamaica, to that retained reserve to improve the capital of the bank, and they asked their dividends at the time from 35 cents to 25 cents. So Mr. Cohen and Mr. Hilton would have highlighted Basel III and IFRS 17 as the main concerns, and it is it's a relatively safe justification, because what we have to remember is that NCB is a systematically important financial institution. Their actions move the market, so they have to be at the top of their game, and BOJ will always be like, hey guys, what's going on? And that is another question that's come to mind, and persons and I have discussed. With this push to have dividend payments now, what will the BOJ's input be on the whole matter? Because BOJ is going to just sit back on the sidelines, observing everything that's going on. They made a statement earlier to kind of calm the nerves of persons looking on, but the reality is, if NCBJ needs to retain more capital to satisfy these capital changes and also deal with increased expenses and so forth, is it a safe move? I'm not saying them pay a dividend to NCB FG to them pay us as shareholders is a bad thing. I'm just speaking more so from the general standpoint of what is coming and changing. And remember, interest expense has gone up and all these other things. I hope that makes a little bit of sense, Kalilah. And another thing that persons tend to underestimate is that the money that they would be getting from Guardian Holdings to the holding company is not flowing up as normal as it would usually be. What do I mean by that? So for those who don't understand, NCB Financial Group is a holding company.
David has
cut out.
We anticipated that this might happen every week, like clockwork.
I'm not sure what happened.
Oh, there he is. Okay.
There you are.
You're back. You froze for a bit. I think you froze again.
Big up flow. Big up flow. Big up flow. But what I was saying was that NCB FG, holding company, they don't operate. They collect cash on the subsidiaries, pay liabilities, pay shareholder dividends, right? Similar thing for Scotia Group, Sagicor Group, so forth. So in 2022, NCB Jamaica, its subsidiaries paid $4.19 billion to it as a company. And then NCBJ itself paid $1.184 billion to NCBFG. When you checked NCB Financial Group's standalone company statement, you saw where they got $1.23 billion from subsidiaries as dividend income. Now, when you do the math and look at the difference, that's $45.77 million that would have come from either Clarion, Guardian, or Link. Link is a startup, has gotten about $2.1 billion, to do its operations and grow. Clarion hasn't paid a dividend to date since acquisition, so that leaves Guardian. Guardian paid NCB Global Holdings, which is the intermediary subsidiary that owns the Guardian shares, 103.2 million TT worth of dividends. In Jamaican dollar terms, that is 2.35 billion Jamaican dollars. So think about it for a second, Kalilah.
But
Guardian Holdings paid $2.35 billion in dividends last year, but only 45.77 million made it to NCBFG's bank account.
And that's what I was about to ask, because Trinidad, as we all know, has issues with converting to USD to pay that parent company.
But here's the joke, Kalilah. In 2020, NCBFG, had a difference of $1.47 billion, that would have been the difference between NCBJ versus NCBFG, in terms of dividend income. And when you looked at Trinidad, Guardian paid about $1.67 billion in dividends to NCB Global, and about $1.47 billion came to NCBFG's bank account. So this is what people need to understand. If the cash from Guardian isn't flowing up as normal as it should to NCBFG, you have a problem. So when you have, and remember, Clarion isn't paying any dividends, Link is a startup, which means NCBFG has to be taking all that quote-unquote burden, in this case, to be able to pay dividends to shareholders.
So let's come to the money question now, Keisha. And I see somebody asking, same thing I was just thinking as well. who is it? Diane says, how will this development affect the NCB stocks? So Keisha, your perspective here, how would news like this, how would you expect it to affect the market? Because I'm thinking there may be two schools. One, those who are excited for the possible resumption of dividends, and then two, those who are concerned about the overall management of the company and where it's heading.
So we can look at it twofold ways, and just kind of coming in as me personally owning shares as well. We can look in the short term with the noise that's happening now, everything out, all the news releases coming out by the minute, by the hour, and we can look in the short term what is likely to happen. So today the stock closed higher, marginally higher, 0.38%. So investors are receiving the news favorably. That's what we can take from it. We'll see what happens tomorrow after people have been able to sleep on it. But so far, it's been well received today.
Well, I think part of that is because trading here ends at 1 o'clock. And so the second half of the news hadn't broken yet. So the early part of the day, the focus was on the dividend resumption and Cohen and Hilton going on leave. And then later on in the day, the rest of the news started breaking and we had that reaction from Hilton and Cohen. And the market hasn't had a chance to react to that yet.
Right.
So we'll see how it
That's why I was saying tomorrow, we'll see how that goes. So what we can glean from today is that investors want the resumption of dividends a lot. So we see that reflected in share price movement. Tomorrow, we will see now the trading around a reorganization of the company. Are investors happy about this reorganization? I will see that. And that will likely continue for the next few weeks or so as more news releases come out. But when we step back from a long-term perspective, the number one driver of share price is fundamentals, the valuation of the company. You can't escape that no matter what. The company ultimately has to revert to trading on fundamentals, which is where I fall and I believe and I stay. I don't necessarily trade so much on the noise. I trade from a fundamental perspective. And has the fundamentals of NCB changed? No. The fundamentals of NCBFG, have they changed? No. Outside of increased capital requirements, which we know are coming, and the insurance regulation changes, which impacted Guardian, the hit has been taken. Most of it has been taken already, and we're going to see more. But fundamentally, NCBFG is still strong. So does this noise then create some opportunity for you in the long term? Because we know the company has to ultimately revert to trading based on valuation. After all the noise settles, I will move on to the next thing. Valuations are going to come into play. My take on it is that valuation is still very attractive. Where NCB is trading now versus what the company is worth, it's still very attractive. And that's where I just stay and say, yes, there is an opportunity in this from a long-term perspective.
Keisha, you know that NCB trading at below book value right now is book value is about $71. Right.
So, sell out.
And Kalilah, I realized when I mentioned that whole cash flow thing between Guardian and NCBFG, like it took a second to process that. That's a part that people don't sit down to actually go through.
Right.
There's a process to actually get dividends. The reality is, the holding company cannot get money from the subsidiaries, then there's no dividends to be paid out. So imagine if that income from Guardian last year flowed cleanly up to NCBFG. Might have gotten a dividend, probably two. But with that money restricted down in TNT, there's no dividend to come out.
But what about the money that NCBJ makes and contributes to the group?
Kalilah, NCBJ got some money from NCB Capital Markets, which is a steam engine of the group. But at the same time, NCBJ has to, look at the environment ahead, not necessarily the present. Because we've seen, where last July 2022 increased interest rates on clients. We saw it again in January, and then we increased mortgage rates, as of July. So I get the picture, hey, NCBJ, has the potential to increase dividends to pay up. But you have to remember, if you actually track over the years, you see that a significant inflow of capital up from NCB Capital Markets to NCBJ which then goes to NCBFG, is then flow out to dividends flow to shareholders as dividends. NCB Capital Markets has paid a significantly reduced amount year over year with respect to dividends. So to put that into context, in 2021, NCBJ got about $19.96 billion of dividend income as a standalone company. In 2021, it declined to $4.19 billion. So that's just to kind of show you that when the dividend income from a subsidiary kind of slows down, it's not as easy to just push it up to the parent level. So it's a lot of, I shouldn't say gymnastics, but it's a lot of cash movements that you have to really look at to understand where the dividend is going to be paid from. So NCBJ can pay the dividend to NCBFG to pay shareholders, but as I keep reminding you, BOJ is watching in the background saying, hey, you guys do realize that, Basel III is coming up. We deferred it from July this year to January, but it's still coming. So it should have been implemented this month, but it's been pushed back. Again, it might push back again in January, who knows, but they still have to prepare for that event. They cannot ignore it. Because $8.1 billion they transfer from retained earnings to the retained earnings reserve is the largest I've seen, even in considering the context of COVID back in 2020. So they are really preparing for Basel III heavily, and also accounting for the fair value losses.
Let me throw a question out there. What do you believe then would happen if no dividends are paid, but we have the share price moving higher?
That would be a good thing for everybody.
What if we have NCB going back to 200, no dividends paid?
Everybody's happy, including MLC, because that for one, the coverage in terms of the collateral from NCB shares, would improve. And on top of that, everybody will be making money again. The reality is that it's a complex
lack of dividends is one of the things tanking the share price.
It's a complex situation.
So
no, but Kalilah,
and then
no dividends. And the thing is that people didn't.
Not right now, David and Keisha, we're having news that's perceived as negative, and that's also likely to affect the share price. So I don't know what optimistic scenario you have in mind there, Keisha, with the price going back to 200, but
I think not necessarily 200, but it's gonna go back up because what we're starting to see is a restructuring. The early days of that, right? And as time progresses and we get more and more releases, we'll see what the future would look like for NCB. So despite if we put aside the dividends, even though we know everybody loves the dividend, but if we put it aside, fundamentally, what is happening with profits? Because that's what moves the share price. If we look at the profit for each of the subsidiaries within the group, what is happening there? Are the profits growing? If they are, then we know then ultimately the share price is going to move. What's weighing down the stock now is sentiment around dividends. Mm-hmm. But if once we have this reorganization, I'm hoping there's some messaging now around the way forward, what the new strategy will be. The financials will show that path of growth, which will push the share price. So it doesn't necessarily have to be payment on dividends, but still the fundamentals are still strong. And I know, right? It's not optimism. I see somebody put in a comment, yeah, Keisha is optimism. It's the analysis, right? It's the strength of the research and just looking this, don't watch the noise. Watch what's really happening with the numbers, because you can't shake the numbers. They can't lie. And the numbers are showing fundamentals still strong. The noise is there and it's open to interpretation because we really don't know what's happening behind the scenes. The only thing we know are the numbers.
So, what my little last...
Yes, last comment, because this show is supposed to be an hour with one topic, but we have to. So last comment.
It's the big topic. Right. So, I looked on Caribbean Jobs recently, and I saw where NCB was hiring for investment banking analysts in Georgetown, Guyana. And I said, NCB Capital Markets, and remember, NCB Capital Markets, NCBJ, Guardian Life are the largest businesses in the financial space in Jamaica, and they have the largest insurance business in Trinidad. So NCB is in a very strong position to really leverage the transformation of the economy. They launched NCB Pay recently for using your phone to pay for transactions. So they have a very strong position to go further, especially when the economy does significantly rebound and interest rates don't hamper a person's, wallets.
Oh, I thought you froze again. All right.
No.
All right. Thank you so much. Thank you, David. Thank you, Keisha, for that perspective. Woo. NCB is one that, of course, we're going to continue to watch. We've been tracking this story for the past few months now.